am a real person. I'm not the avatar for Mariantina Gotsis. This could be the shortest presentation of the conference because I can just say, you should listen to what the people said before me. They had a comprehensive discussion of investment. But the other thing I wanted to emphasize is what they pointed out about licensing. This is very important for you to develop your funding and your revenue streams. That they had exclusivity for particular segments of the markets. And so read your license agreements closely. So let's start with a thought exercise. Don't worry, I won't call you, but I'd like you to think, what's in your mind's eye when somebody says virtual reality? So begin thinking about that. Let me pose what I think you will say. Is it technology to tell a story in a digital world? This is really a cool photograph. This is just a beautiful one. I had to use it. To one user at a time. So, is it technology to tell a story in a digital environment to one user at a time? Well, that's pretty much what most VR people say about VR. It's storytelling in a cool environment. But this is not most people, this audience. You're professionals, you're specialized, you know this area. Whoops, I gave it away. Now, if it's storytelling, as we talked about today, isn't that quite confining? It's what I would call the hegemony of narrative. So you're not most people. You see other options, other alternatives for uses. For example, we've seen brilliant presentations on treatment, medical treatment, PTSD, pain management, so on and so forth. We've also seen presentations regarding training. Great. But isn't that still narrative? Isn't that still you telling me a story? I'm a viewer, not a participant. Why can't you give me VR for me to make something? Hopefully it works. That's kind of a cool device. But I don't really care if you like it or if it works. I care that I can make it. What about tools for me to make my own world? Not you telling me a story, but me telling myself a story. Or my friends, or not telling a story at all. So you see there's a difference between what you probably came up with, which was storytelling in a cool environment, and its technology, to me proposing there's the other half of this. And for digital natives, this is an obvious conclusion. For those of us who are a little older than digital natives, much older, it's less so. We think about the hegemony of narrative. We think about narrative as the default position on virtual reality. So what do the VCs see? VCs see. What do the venture capitalists see? It's a jungle out there, but what they see is an ecosystem. Here's where they've already invested. To date, depending upon how you count, it's between $4.5 and $5 billion in very recent investment. But it's things like virtual cinema, Dreamscape, VR movies, creation hardware, health VR. So if we divide it into, let's call it the supply chain for VR, create, distribute, consume, share, and measure, you can see most of the investment has gone into the create side, a little on the distribute. Some of these say they actually haven't invested yet. Cable, OTT, down at the bottom here. And those in italics, they haven't invested on the VR side. I've put them into propose. So where will VCs invest? It's almost anywhere, as long as they see that the value of their investment will increase by the next round. Be clear, let me be clear about this. They're not investing today for you to be the Amazon in 2 years or 5 years, or MGM. They're investing in this round so that you will spend their money to achieve the milestones, so when the next round comes around, the pre-money valuation and the post-money valuation of the next round values their initial money at a higher amount. It's not about money or revenue. It's about the delta in valuation. It's what we call the hockey stick. It's the hockey stick in valuation. What they say they look for is 30 times their investment over multiple rounds. Now, let's go back a moment. We already have $5 billion in money in VR. I'm going to stand over here so I can see you. We already have $5 billion in revenue, in investment, in VR. So multiply that by 30 times, and if my math is correct, and I'm a lawyer because I'm not very good at math, it's $150 billion, the valuation they will expect. So remember that number when I get near the end of this presentation. So what is it about? Currently, it's about bragging rights. It's about their herd behavior, pre-existing bias, who knows whom. You notice I left one out. And that's because you have to keep in mind that once venture capitalists form a fund, they're immediately trying to raise another fund. And they're competing with other venture funds to get new limited partners. And so they want to be able to say to these new limited partners, and to their current limited partners, you've heard about this cool area called laptops. You've heard about this cool area called wireless. You've heard about this cool area called VR. We're in it. As irrational as that may sound, it's very rational if you're competing for the LP's investment in your next fund. So why are they interested in VR? One, there are B2B verticals for rapid growth. These are things we haven't really talked about much here, but they're probably one of the biggest areas. Boeing combining VR and AR, not only to train people to build their planes, but to build their planes. Those we will see quite pervasively. Second, we see a massive growing installed base of users, participants, with headsets. So, in addition now, what we have, which is fairly rare, is we have a convergence of major players who are tech companies and who are media companies. Hollywood has failed in the digital world for 20 years. They've invested billions and have gone nowhere with it. But now they're in it, and now Google's in it, Facebook, big players with big money. But they dislike VR because there are currently potential multi-billion-dollar fiascos. Magic Leap could cause the bubble to burst in VR investment because they have, what, almost $1 billion in venture capital money already invested in them? As we all know, Facebook has closed its internal studios for Oculus. And there are, of course, other problems they're having with Oculus. It's expensive for consumers to enter this market, and there's no compelling reason. Do you remember, does anybody old enough to remember the story about how the CD player became wildly popular? This may be apocryphal, but I understand this to be true. Dire Straits, nobody would buy a CD player. Dire Straits, I think it was their second or third album, came out only on CD. So people had to buy the CD player. Somehow that's going to have to happen because it's the chicken and egg content problem. And of course, we have massive technical limits, such as throughput, processing power, power cords, so on and so forth. Now, did I skip a slide? No, okay. So here are some models in the venture capital world that can still work. One of them is the marketing and distribution platform, marketplace and distribution platforms. I think this is going to be a very hot area. Steam's doing very well these days, but I think it's not just VR. In particular, I think what we will see is sharing, which is to say several types of sharing. There's the sharing of, hey, Bill, take a look at this VR title, to, hey, Marianne, come into my VR world, to, hey, world, come into my VR world. What I like is what I call the Levi-Strauss theory of making money. Many of you are wearing what Levi-Strauss invented in 1847, I believe it was. And that is, Levi-Strauss started by selling blue jeans with the rivets here so that when you bent down to pan for gold, they wouldn't rip. So the Levi-Strauss theory of making money is don't pan for gold, i.e. don't make VR content, don't make the technology, Sell the pans to pan for gold. I think that's a viable market for VC investment. Sorry? Now, you see I put making content at the bottom. Content is last because digital content in Hollywood have not gotten along very well for a very long time. They have just blunted their pick in this area, rightly or wrongly. There are very high production costs, as somebody mentioned before, doing VR. And if you use the Hollywood model, it's really high. We worked with a company that did a VR product that worked out to about $100,000 a minute in a 17-minute product. You can do the math. And I'll tell you, that product is out there now, and within a year you'll go, oh, this is really boring. So they all have a really very short life. On the other hand, as you heard earlier about content and how they raised money, there are opportunities. Maker Studios, a venture capital fund called Upfront Ventures in Los Angeles, one of the best, invested in Maker Studios and sold it 18 months ago, I think, Paul? Whatever, $500 million, whopping return on investment. Studios are committing. We know DreamSpace has MGM, Warner Studios, and somebody else involved in investing in them. There are venture funds now. You might have heard Joel Newton yesterday. He's creating a $100 million fund to fund VR content. Plus the dire straits. Does everybody know the story about porn and VHS? If you really want to make money in content, it will be in porn. We have the VHS, had the VHS, as the technology of choice, not beta, because porn chose VHS over beta. It's currently probably the biggest area in VR. Okay, here we go. So, I think that they will look at B2B, although there are longer sales cycles, higher tech specs, but I think this will be an area where there'll be substantial investment. Some of the companies here I think will be invested in. But let's look quickly. Remember the number I gave you? So the estimate is, all the estimates for about 3 to 4 years from now, pick the number 2020, 2025, is that VR will be a $150 billion market. Big number, huh? Well, remember our little math exercise a few minutes ago. Our number came up with 150 billion, which would mean, if it's 30 times investment, that venture capital is already fully funded in this market, and it's over for VR. I don't happen to believe that's true, because I don't believe that they will get 30 times their investment across all that 5 billion. Typically, 1 in 10 investments is wildly successful, so we can say, let's say it's roughly 500 million, so now you can see that there's still a lot of room for it. But look at what's competing for their money. The Internet of Things. By that same time period, call it 2025, 2020, 19 trillion. What is that, roughly 1,000 times difference? So it's a challenge. It doesn't mean it can't be done, it just simply means it's a challenge. So, as you know, I've been mentoring them on doing pitch decks here, and I want to quickly go through the basics. I have a couple of minutes, okay? The pitch basics really come down to pretty obvious things, but this is really what they want. First and foremost, they want teams and expertise. They want to see you have a team that has a track record. We met today with a very nice company downstairs, and they were talking about all the new product, all their new VR concepts. And I said, well, tell me about your background. Well, it turns out they have been doing special effects since 2003, and I said, whoa, wait, that's your hot selling point. You're grown-ups. What VCs want to see is that you're grown-ups, that you can manage their money well. Hot sector, obviously. Barriers to entry, that's a challenge when you're dealing purely with VR content. When you're dealing with toolkits or making a world for me to enter or making tools for me to make my own world, then I think it's a different animal. What they want is achievable milestones. Hi, I want $1 million to make my VR XYZ, and in that $1 million, within the next 18 months, I will achieve the following milestones, which will raise your valuation according to your internal metrics. So, these are the questions you answer. These are the questions you answer. If you're pre-proof of concept, skip this one. As somebody said to me today, European VCs always need to see a revenue model. Actually, he's the guy from Swisscom, and he said, I just made up some numbers. I just gave them phantom economics so somebody would check that box. As I said before, if you remember nothing else, remember this. You seek money by stage. The companies that were just here today, they'll be looking for Series A money of 5 to 10 million. Companies, a lot of them downstairs, they'll be looking for the seed rounds of 200,000 to 500,000. Finally, what I say is beware of founderitis. Founderitis is the obsession with your company that you are so convinced that this company is going to disrupt the world that you end up proposing things beyond credulity. I jokingly say, people say, yes, we're going to train you in heart surgery, then we're going to revolutionize brain surgery, then we're going to cure cancer, make coffee, and give massages. And for this, I need 5 million, right? We forget Jeff Bezos founded Amazon by saying, I'm going to enable people to browse lists of books online, place and pay for orders, and then they're delivered by traditional trucks. He didn't say I'm going to revolutionize retail. And that's the same, so you need to avoid founderitis. I chose these people because they look really arrogant, and that's the problem with founderitis. So, let me close by saying these are the areas that I think are pretty hot. I like VR, it's VR, AR, and AI, because it enables AI to know where I want to go with my new world. I really like the idea of a DIY kit, do-yourself kit, for me to make a world, or for me to find a world where I can go in. Remember Second Life? Well, if Second Life worked today as it proposed, it could be an ideal place, because it gives you places to do a lot of things, to share, to make, to build. I think strategic content, which is to say industrial training, surgery, so on and so forth, is very good. The toolkits, the tools for people to make the VR, I think is another area we're going to see good investment. And finally, places like MOGs, 3D games, and in particular, if we can get, esports is an enormous market now, and there are very few venture capitalists in it, but imagine VR in sports on an esports platform. Esports means you're basically a digital fan watching as if you're in a stadium, watching people compete. So they should be able to do that. Likewise, Machinima is similar to that. And then finally, marketplaces. When it all comes down to it, VR will explode when we are able to share and participate with a bunch of people in the same community. And that is another area. So, that's it.